your plans for investing in gold for the rest of the year? As I'm sure you're aware, gold made a welcome comeback in April, jumping above $2,000 for the first time in more than a year. While the move was great news for gold investors, the bad news is that the precious metal typically rises during times of economic headwinds. In this case, the US banking crisis had taken hold amid persistent inflation and fears that the US was falling into a recession. While those fears remain, we're also officially in a bull market run. So what does this mean for gold and its outlook for the rest of the year? Welcome to Pocketful of Dirhams. I'm Felicity Glover, the personal finance editor at The National. Joining me today is gold expert Aziz Moti, General Manager and Head of Analysis at ISA Bullion, who's here to talk about his thoughts on gold and the precious metals outlook for the rest of the year. But before we begin, don't forget to subscribe to Pocketful of Dirhams on your favourite podcasting app. Welcome to the show, Aziz.
Thanks for having me, Felicity.
You're welcome. So tell me, what makes gold an attractive investment for investors, particularly during uncertain economic times?
Well, gold is the oldest form of money historically. It'll always have intrinsic value. Look, it has been a safe haven always during uncertain times. And with that, it was always going to have global demand, right from central banks to retail investors. However, gold has a limited supply, so it'll always have a store of value. Last year in 2022, actually, the central banks were one of the major buyers of gold. So gold is gold and it'll always be gold. There's nothing that will ever change that.
Okay, so what about from the investor point of view, retail investor point of view? Should they be adding gold to their portfolios, particularly now? We're in a stock market bull run. How does gold typically perform during a bull market, for example?
Look, typically during a bull run, gold has an inverse relationship with the equity market. And that's where diversification comes in. So no matter if it's whatever type of market it is, managers usually recommend you to always hold about 10 to 20% in commodities due to the inverse relationship with the equity market. So you can always kind of be balanced out.
Okay, but are there any guidelines for investors to follow when determining how much gold to allocate to their portfolio? Let's just take commodities out of, sort of a 20% general commodities. Look, should it be, with gold, should they be focusing on, for example, 5% or 10%? And can you explain why?
No, I would say besides gold, let's look at gold and silver. Specifically, let's start with gold first. So I would say about 10%. The reason for that, I'll get in more as we get in further. But when you're comparing gold historically, price-wise, if you say at a 10-year period to this year's 10-year period, you look at the gold value and you say it's only moved 10%. But from that allocation, you need to do two things. You need to say this part of the allocation is my long-term view of gold, and this part is my kind of active trading gold that I'm kind of trading within the year. And why I say that, besides the equity market, in the gold market, whether it's a bull market or bear market, there's always going to be opportunities to trade gold.
Okay, that's interesting. It's also described as a safe haven or, a hedge against inflation, which, we're experiencing persistent inflation currently. It seems to me that its performance over the past year or so has been a bit hit and miss when you apply that theory. Can you explain why that's happening as well?
So, when the theory of the hedge against inflation came out in the early 60s, 70s, when you look at the data and when that correlation came in, access to the market was to the gold market was not that great. You didn't have a lot of institutional investors, you didn't have a lot of retail investors coming into that. Now, within the current times, there's a lot more buyers and sellers, which creates a lot of volatility. With that volatility, it kind of looks like it's not a hedge against inflation with the ups and downs, but it still is a hedge against inflation. So if you just look in the last 3 years, so let's say from the period of 2020, gold started at around, I think it was about 1650. And in 2023, we had 1950, so with that, in that 3-year period, gold crossed 2000 3 times. So in that 3 times, you had not only 3 opportunities, but there were numerous opportunities to trade gold on a short-term, medium-term basis. So that's where kind of, when you look at that, when you look at the current charts of gold and you say, is that theory still correct with inflation? I would say it's still correct, but going in straight line, it always goes up and down.
But what about, for example, crypto? That's, being touted as the new gold. How does that compare to cryptocurrencies in terms of investment potential and risk for investors?
See, look, there's probably specific cryptocurrencies you could look at, but generally the cryptocurrency market is very new, and there's a lot of tension in the market, as you've seen in the news recently. So it comes back to say, does cryptocurrency have intrinsic value? Would you be able to, if something was to happen in the cryptocurrency market where, exchange goes bust or there's a blanket ban on a certain cryptocurrency, what will happen then? Would you be able to sell it for that price that was yesterday? But with gold, with it being like the, oldest form of money, it's always going to have that value. But if someone says, is XYZ coin, what is it? You start looking, it's too many things to look at when you look at cryptocurrencies, and you have to start looking into that specific cryptocurrency and coin and so on. And then also besides that, the legality with cryptocurrencies, even here in the UAE, we've been at the forefront with cryptocurrency and stuff, but it's still not easy to get fiat cash in and out of exchanges. It's still a very difficult entry point. So can it compare to being gold? I don't think so. I'm not with that one. I know a lot of people do see it as that way. In other cryptocurrencies, there's no recourse. With gold, there's recourse, where whether you buy it from someone like us, or you could take that gold from us and sell it anywhere. Whereas you couldn't go into a convenience shop and say, I have XYZ coin, can I buy a loaf of bread? But you can go in and say, I have a gram of gold, can you give me a loaf of bread, for example? And with that, the volatility that comes with the crypto market, crypto is something that can make you a lot of money, but can also keep you up in the night, where gold is not something that, keeps you up at night. It's something that allows you to sleep peacefully.
Okay, that's interesting. I do have to say, though, that crypto does keep me up at night sometimes, which is a bit unfortunate. Anyway, but can you just finally tell me about, or talk to me about, what your outlook is for gold for the rest of the year, and how should people be, investing in it?
We see gold ranging this year between this 1850 to 2100 mark. Going back to what I was talking about, the diversification. So when an individual is looking at what they need to do, they need to say, split up, right, this amount of gold, I'm going to keep it as a kind of my long term and park that away. And then they need to take another, say, if they've allocated 10% to gold holding. So they say 5% is for long term and 5% on the short term, medium term. And why I say that, you see, when you're trading gold, and I'm talking physical gold, not a non-leveraged product, there's a lot of people out there that are, saying that you are buying gold, but in actual fact, it's actually paper gold. So it's a leveraged product. Whereas with the physical gold, you've got these moves that happen, $50 to $60 moves you could see in a day. And that's where we kind of guide our clients to catch those kind of $50, $60 marks. At the end of the year, be sitting at a good positive without having headache. Let me put it that way.
Okay, so basically don't give up on gold.
Yeah, and also with interest rates going up, it'll put pressure on the short term. So by the end of the year, we could see the price heading towards 2,100 to plus, around that. So that's also with the interest rates coming up in the short term.
Thank you this week to Aziz Moti from ISA Bullion. If you would like advice on your personal finance issues, you can write to me at pf@thenationalnews.com. And remember, PF stands for Personal Finance. Please do subscribe to Pocketful of Dirhams on your podcasting app to receive updates, and also leave us a review so we know what you think. This episode was produced by Arthur Edison and Dua Farid, and I've been your host, Felicity Glover.